All right, traders. All right, let's go ahead. Let's get it started. Let's go ahead. I'm going to go ahead and take off the thumbnail here. Today, welcome to it, guys. Welcome to Money Mitch. Like always, we're going to go ahead and get into our topics of the day. We got a lot to talk about today. There's a lot going on right now. There's some worry about what's going on in the option market. We'll talk a little bit about what's going on there. Fed giving some promises out there. Quad witch. Of course, X also giving some guidance. Revlon trying to bounce back from bankruptcy. We'll take a look at a recap of the overall week. What kind of numbers we got out today. What was the talk of the week? We'll also take a look at energy, as it looks like, man, it's definitely getting a rotation against. The question is this just a pullback correction, or are we really starting to see that demand destruction starting to happen in oil as we see these names down big today? We'll talk about that. Travel trying to get a little bit of a rally, but not getting much there. We'll talk about how at the open, we saw a lot of these kind of rallies just kind of give up the gains. It's been very volatile day, of course, because it's a quad witching. We'll talk all about that right here on Stock Market Movers, where we go into the headlines and, of course, bring you the experts that you guys need to keep in the informational edge. Like always, guys, smash it on up and do me a favor. We didn't have a show prior, so if you can do me the favor and just look down, hit that share button and let everybody know we are going live right here on Stock Market Movers. We got a great show for you today. We got Giles Coghlan, Chief Analyst from HYCM. We got Michael Wang on later, veteran fund manager and CEO of Prometheus. We're going to have a great show. And like always, guys, smash that like button and get ready to get into the headlines of the day. Let's start it up. Welcome to Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, welcome to it. You guys see the topics at the bottom. I'll go ahead and I'll try to hit that up early on so that you guys know what's coming up on the show today. Like always, we're going to keep going into our interviews. Also today, we'll talk a little bit about that. But of course, like always, what we like to do is take a look at the market action. What is going on out there right now? So let's go ahead. Let's pull up the SPY and see what we see right now. So let's take a look. The SPY just being what? Choppy? Wouldn't you know it? Of course. That's the way the markets have been lately. Now, one thing that you can clearly see here is that we tried to make a little push on up past that 369, failing again. I talk about it all the time. When you keep getting those fails at the resistance, a lot of times you'll make a move towards the support. That's exactly what the SPY did. It actually broke through yesterday's low, coming down closer towards a low around 363. But then we found also another push back above the VWAP. Now we're just keep fighting in the zone. We'll see if we can get back above 369 on the day. I'm keeping watch also on this daily RSI. Now that's down towards 2150s. We could see a little bit of a dead cat rally. Doesn't guarantee anything, but one thing I always like to point out is the extreme moments on the RSI. Last time we were in this kind of range down here, we definitely found a balance, and eventually it, was short-lived. But whenever I'm seeing extremes, and for me, extremes on the SPY on the daily are going to be below that 23 or 24 level. There's not many times where we get readings like, let's say here, of let's say 18. And so anything below that doesn't mean that I'm necessarily going to trade no matter what towards the upside, but it does give me the description and telling me that we are definitely getting into oversold territory, and we could see one of those bear market rallies, right? And so that's one thing that I'll definitely keep on watch. We'll see if we can close back above 369, because I think if we do get above that, 373 is in reach. We'll see what happens there. Another thing to point out on the SPY, and I can take a look here on the hourly, how it's doing. Let's actually go towards the daily here. So I like to pay attention to see if the ATR is expanding or contracting. You can see here we're starting to contract a little bit. We don't want to see this start expanding into the move, because a lot of times that's how we get that continuation. But we're going to keep watch to see how the volatility kind of expands here in the SPY. Now let's touch a little bit about what have we seen today, right? And so stock's extremely volatile. A lot of this, having to do with just the quad witching coming into play. And it's been a crazy week. Let's just be honest. There's been a lot going on. We had a Fed hike rate. We had a PPI number. We had surprise rates increased by the Swiss bank. This was a rate, a half point rate hike that it was their first time raising the rates in 15 years. That just shows you around the world just how much inflation truly is present. Also, the Bank of England raising their bank rates to 1.25 from 1.0, implementing the fifth consecutive hike rate, interest rate there. UK's inflation has soared to a 40-year high. And they also expect inflation to rise above the 10% later this year. So it's something that we're definitely seeing. Not only in the US markets are we seeing inflation, but it's really worldwide, right? It's no one able to hide right now. And a lot of that being due to what? Of course, energy and food. Those are the areas that we're seeing the most inflation coming in right now. The Fed did raise their benchmark interest rate 0.75%. And what did this do? Really, this just got some kind of certainty that, yes, we do see the Fed fighting back inflation, but there's still worries that the Fed tightening could bring on the R word, the recession, right? And I know that Powell thinks he can, have this avoided, have a soft landing, but it's something definitely to keep on watch right now and see how we develop. The Fed officials did roll out some strong language on Friday here on their approach to inflation. This is ahead of course, Jerome Powell's appearance before Congress next week. So definitely keep your eyes out open. What are we going to get from that speech? but he wrote down and in the language here, the committee's commitment to restoring price stability, which is necessary for sustaining a strong labor market, is unconditional. What does unconditional mean here? Of course, we're going to have to wait to hear from Jerome Powell next week to hear a little bit more about what that unconditional can mean, but definitely some strong language coming out by the Fed here and stepping on in. All right, now another area that happened today and why many traders are posting on Twitter about their trade. What is going on in the options market right now? And if you guys want to go ahead and check that out, what I would go ahead and tell you guys to do is to check out this article. I'm going to go ahead and throw it on up. We just put it out on Benzinga a short while ago. So if you guys want to read about this a little bit more, check out that link. And let's go ahead. Let's talk a little bit about this. So really what's going on right now is kind of a system issue from the CBOE, which is causing the stock trading platforms on Friday to have a bunch of errors, really. Let's just be honest. There's kind of areas where right now many traders are posting on Twitter that their options trade would not process because the bid price was actually above the offer, the ask price. This is not the way it's supposed to work out, of course. Now, the CBOE did provide updated status around 10:30 that things were back in order. They did TD also saying that thank you for reaching out. TD Ameritrade was talking to their traders, and they did put out a statement saying thank you for reaching out. There has been exchange side issues with the bid and ask on the options this morning at the CBOE, and it has now been resolved. And our trade desk is glad to help with any trades that you have concerns with. That was from TD Ameritrade. So if you guys are seeing some issues or you guys experience some issues, I would definitely tell you go ahead and reach out to your brokerage. The issue appeared to be resolved. The CBOE providing that updated status at 10:30. So one of the things that we tried to do for Benzinga, like always, is get you guys the informational edge. We reached on out trying to get some comments. And what we got was the trade desk is not able to comment for compliance reasons, but please contact your broker/dealer for any inquiries about your ability to interact with the market. And that was from trade desk manager, U.S. option, Ryan Stone. So definitely keep on watch what's going on out there. And please be advised that issues impacting OPRA market data for all CBOE option exchange have been resolved. All CBOE systems are operating normal. That's what the CBOE is commenting right now. Of course, this comes on what? This comes on the eve right now. The quad witching right now, guys. It's quad witch Friday. What is quad witching? The term really quad witching refers to the date, and this happens 4 times a year when certain derivatives contract expires simultaneously. What happens here? So 4 different types of contracts expire. So you have, of course, you're going to have the stock index futures. You're going to have the stock index options. You're going to have stock options and single stock futures all expiring at once. This happens 4 times a year. It's the 3rd Friday of March, June, September, and December. And now we're going to be watching what happens in the quad witching hour, which is the last hour of the trading session on the quadruple witching day. Do we still get some issues from the CBOE? I'm sure that's not what we want right now, but we're going to definitely keep that on our radar because as you guys can see, some traders were definitely having issues earlier on in the day. Something to definitely be advised on and to keep watch to see how that's reacting. Another thing that I would recommend, like always, and we say this on live trading all the time, check your platforms, see how they're performing. If you're seeing some issues, definitely either reach out to your brokerage or wait till you don't see those issues to continue trading. Like always, we're not here for financial advice, here for educational purposes only. But I just want to make sure that out there, you guys are protecting yourselves. All right, in a second, we're going to be getting into our interview. Before we do that, I did want to go ahead and mention some other news that's on out there. We could take a look. Of course, we'll talk a little bit more about the Fed, what's going on out there. But we could talk a little bit about X here. Let's go ahead. Let's take a look here. U.S. Steel putting out some guidance here. And let's take a look how it's trading on the intraday. So you can see here, I'm going to show a 15-minute chart here. Let's go ahead. Let's cover exactly what happened. So U.S. Steel Corporation today provided second quarter 2022 guidance. The second quarter 2022 guidance adjusted EBITDA is expected to be approximately 1.6 billion, a new all-time best here, second quarter performance, and second quarter 2022 adjusted net earnings per diluted share is expected to be in the range of $3.83 to $3.88. So definitely a good result there with all new all-time best second quarter performance. But as you guys can see here, there's kind of a rejecting of the move here as we were looking like we were going to get above towards the 2125, start filling up some of this gap that you can find on the daily. But definitely investors gave back all those gains. It came back all the way down towards 1959. We'll see where U.S. Steel Corporation closes the day, but definitely fighting back some of that. I mean, they gave great guidance, all-time best second quarter performance, but also heading down. What does that show to me? That shows me more and more that we are in a bear market, that even with good earnings, good guidance, we saw that from Kroger yesterday. Hey, even if you give that, doesn't guarantee that you're going to be into the green. Kroger actually coming down big today. So keep that on watch, guys. Shares dropped 7%. One thing that did happen, though, Kroger did mention recent that rising inflation is spurring customers to choose cheaper store brands. That's the first thing that usually happens when the consumer starts feeling the pressure. We usually go towards the cheaper brand. I talked about it as a kind of a joke that I had to maybe move from my Frosted Flakes to maybe just Flakes, because it's going to be a little bit hard to keep those nice store brands going. But we'll keep on watch how the consumer's moving. We'll talk about travel coming on up. We'll talk about Revlon. We'll talk a little bit even about Moderna after our interview. But let's go ahead. Let's get into our interview here. Like always, guys, we want to go ahead and bring on the experts to give you guys some expert opinion on out there. And that's really what it's all about. You know, one thing I can tell you guys is I can show you what's on my radar, but there's going to be no better way than going ahead and bringing on the experts to give you guys that informational edge. So let's go ahead. Let's bring on Giles Coghlan here, the chief analyst at HYCM. Let's bring you onto the show, Giles. How you doing?
I'm doing good, Mitch. Thanks very much for having me. It's great to be with you.
Awesome to have you. I can feel the energy, and I love to bring the energy. So thank you for coming on, Giles, and welcome to the show.
Yeah, you're welcome, Mitch. I've enjoyed the start of the show, so I can see you're an energetic man.
The only way to do it, because at the end of the day, I mean, everything in life usually knocks us down, but one thing that we can do is always bring the energy right back up. Let's go ahead and, you know, there's some tough times going on right now. We can talk about the Federal Reserve meeting on Wednesday. What did you see out of that meeting?
Well, what was fascinating was not only the meeting, Mitch, but also the way the meeting came about. It was the headline print of 8.6% year-on-year headline inflation last Friday that really started moving short-term interest rate markets. Because as soon as that really hot headline print came in, remember that the market was thinking peak inflation. It wasn't a question of inflation dropping off. It was a question of how quickly would it drop off. Then that headline print on Friday suddenly said, hang on, inflation is a major issue here. It's 8.6%. We're not at peak inflation. It's actually picking up further. So it was the run-in to Wednesday's meeting. We then had a Wall Street Journal article that was apparently hinting that the Fed would be hiking by 75 basis points on Wednesday. And do you remember running into the event that Jerome Powell had explicitly said there wouldn't be a 75 basis rate hike? But there was in the event a 75 basis point rate hike. Now, in the end, markets weren't surprised by it. It was flagged well in advance, rightly or wrongly. The word got round, short-term interest rate markets priced in that 75 basis point rate hike. But that is the key giveaway really here, Mitch. The Fed is concerned about rising inflation. And the way that that extra interest rate hike crept in last minute is the signal. It's all about inflation. And then, of course, Jerome Powell was absolutely explicit in the meeting about that as well. But I'll give you a chance to have a conversation so I don't dominate it one way.
Hey, no worries, Giles. I think you said it right there. And I think you're 100% right in showing that the expectations changed, right? And where we came from is not where we were just this week. And I think that's a very important point. One of the comments that caught me by Powell on Wednesday were specifically, he stated that he did not see slowing down in the economy, that there was no slowing down in the economy. Is this what you're seeing out there, Giles?
No, I think there is evidence of slowing down. We've seen a slightly softer retail sales data. We saw some elements of the industrial production data, which was slightly weaker today. We've also seen a cooling in the housing market. We've seen increasingly the stock market pulling lower and lower and lower as investors are convinced that the Fed will hike into a recession if necessary. And what I'm seeing, Mitch, is the message from the Fed on Wednesday was crystal clear. And that message is that Jerome Powell said he couldn't guarantee a soft landing. That's what stood out to me in the meeting. And really what he was saying by that was the priority is to bring down inflation, even if that means bringing the US into a recession. So we have actually been told what's coming, and the way that the stock market was falling into Wednesday was investors kind of steeling themselves for that fact. And then you notice there was a slight rally on Wednesday evening, but all that was just a knee-jerk reaction to Jerome Powell saying, I'm not anticipating 75 basis point rate hike to be the norm. But when you actually digested what he actually did say, and he was very explicit, he said the worst mistake the Fed could make would be to fail to tackle inflation. And I think there's almost a subtext to that, isn't there? You know, even if that means us heading into a US recession. Interestingly, I looked at the data for historical US recessions and falls in the S&P 500. And essentially, in the past data set, when the S&P 500 falls about 24% roughly, typically that does result in a US recession. There tends to be a US recession in line with that data. So what I'm seeing now is a deeper correction in stocks, which I'm expecting to bottom out around the end of October time. I think we have got another leg lower here, but it's all going to be data dependent. This could all turn around if inflation turns around.
Definitely. That's one thing that I've heard multiple times this week, that whole, the Fed is data dependent. And I think that a lot of people don't really understand what that means. And at least in my eyes, what does that mean? That, and I've talked about this, I feel like the Fed tends to stay in extremes. And we were at an extreme in the monetary support for a little while there.
Yes.
We were supporting the economy with all we could. And now we're playing the opposite side of that extreme and now going into that restrictive policy. And you guys are seeing kind of the extremes. And so to say that the Fed is behind the ball would be kind of not even thinking about how they make their decisions, right? They make their decisions based on the data, and sometimes that data will lag.
Yeah, I think the problem, Mitch, and I think the reason that some people are frustrated is that this could have been preempted to a certain extent. And actually, the only way that inflation can be tackled is if the central bank tackle it. It's one of the, the few direct impacts they can have on an economy. So I don't necessarily agree that the Fed has gone too aggressive yet. And I think the danger is doing too little. And that's what happened in the 1970s. There was a continual kind of acceptance of inflation. And it was only until one Fed chair really took it to task and hiked interest rates and brought inflation back down from double digits. But unfortunately, unemployment went to 10%. There was some civil unrest issues, some people that were really struggling with higher interest rates. But it took that aggressive action to bring inflation down back in the 70s. I only think aggressive action is going to bring inflation down now, and the temptation will be to do too little. So that's my personal view, Mitch. It's kind of, we have to bite the pain at some point, and the longer we take, the more pain we get for longer. Now that's my personal view. But what we should look at, Mitch, in terms of the near-term shifts, is the core PCE data that's coming out on the 30th of June. That's going to be the next indication of how US inflation is going. Now, it's expected to come in 5.1% year on year for May. If that comes in 5.6% or higher, then we're going to see more aggressive Fed rate hike pricing. We're going to see the dollar rise. We're going to see Euro US dollar fall, equities fall. But if it comes in, say, 4.9%, 4.8%, then the market's going to go, phew, inflation maybe has peaked. We are seeing some relief. The Fed won't have to be so aggressive. So you'd see the dollar fall, 10-year yields fall, see gold rise, and equities pick up. So my next sort of point to catch breath and to look what's happening is the Wednesday, the 30th of June, with the Fed's preferred PCE data print.
Definitely something to keep on watch. There you guys have it, and the estimates. And I did throw up in the chat, if you guys want to check out Giles's Twitter, definitely go ahead and give him a follow. I did see mentions of that in the chat. Let's keep going. Now, one of the things, of course, is the kind of mentality here is, is a recession really a negative thing when we're worried so much about the inflation, right? Because at the end of the day, I mean, no one wants to go into a recession. No. But at the same time, we don't want to get into, like you just mentioned, the 70s where inflation just went rampant. And we're talking, we're not talking little, we're talking double digits, right? And so that's the plan to avoid.
My father really struggled with his interest rate payments on our house. And there was one stage when my parents thought they're going to have to walk away from the house because they can't actually afford the repayments. So inflation is seen as, from anyone under 40, they wouldn't have necessarily experienced what high inflation is. It's not something you want to have. And if you're a homeowner, you think about people who have maybe bought a house in the last 12 months or last 5 years. They would have bought at quite high prices. And they would have put into that, that calculator online, what repayments can I make with my interest rates being a certain level? And maybe they played around with it. They said, well, what happens if interest rates rise by 200 basis points or 150 basis points? And they go, oh, that would be hard, but we have to manage it. Well, how about if those interest rates rose by 1,000 basis points? then you're looking at a totally different ball game. And that's life-changing and life-altering. So inflation must be tackled, Mitch. And I think the worst case for us all would be if inflation isn't tackled. But unfortunately, and this is the sad thing, Mitch, either way, some people are going to lose out.
That's the truth.
There isn't a pain-free option. And that, I think that's what makes it so hard, is that, if I do this way, I'm going to hurt that group. If I do this way, I'm going to hurt that group. Whatever I do, someone's going to get hurt. We naturally shy away from that. And I have to say, Mitch, it's not a decision I would personally like to make.
Yeah, definitely. I'm glad I'm not in Pal's shoes. Let's just be honest about that.
Yeah, exactly. It's a tough role, isn't it?
Yeah, definitely a tough role. And one of the areas that I'm starting to see weakened up, and I know you can talk about this, Giles, is the commodities. And the commodity trade just seems like it's really just starting to fall apart. What are you seeing in that environment? And is this, in your eyes, more of a correction? Or are we really starting to see the rotation come away from the commodity trade?
Yeah, well, oil market was very interesting today. Last time I looked at it, was having a bearish close. looking at a bearish engulfing bar on the daily chart, and one of the weakest weeks in about 5 weeks. That to me tells me that oil traders are looking for what we've been speaking here, Mitch. They're realizing that actually the Fed may hike to bring about a US recession. If you look back to about 2008, 2009 global financial crisis, I was talking to a colleague today who pointed this out to me, which is that it took an official bear market to kind of be declared. And then a couple of weeks later, oil markets really fell sharply lower. So kind of stock markets started falling and then oil markets plummeted not long after. So are we beginning to see some of that weakness in oil markets? Oil markets are complex. There's a lot of idiosyncratic drivers in oil at the moment, particularly that Russian-Ukraine crisis, the lack of Russian production coming to market. We also have a lack of capital investment into oil markets because it's not politically correct to really invest in fossil fuels. So there's these difficulties that are involved in oil markets. But if we do head into a global recession, then commodities will naturally weaken.
Perfect example. I mean, that could be why we're starting to see a little bit of some weakness on out there, at least for investors taking some profits.
Exactly, Mitch. It's something to keep an eye on.
Yeah, definitely. It's something to keep an eye on. And one of the things, at least from my watching of the overall market, each time that I've seen the market really come down, it's been when the energy trade has come off. Maybe it's just that day, but I have seen continued weakness. I don't know if you've seen that, Giles. So I feel like if there's anybody hiding, it's probably in energy because it's been the best sector of the year. So
yeah.
If there's anywhere where the rotation can come out of it, and that's probably where we're going to see that rotation. All right, Giles, that's going to do it for us today. I appreciated you coming on and having some great conversation on what happened this week with the Fed. I also appreciated you telling us your opinion on what did you see in that meeting that was really important. So thank you for coming on. This is Giles Coghlan, Chief Analyst at HYCM. You guys can check him out. Of course, I'll put up his Twitter handle again. And we'll have you back on, Giles. Thank you for coming on.
Thank you for having me. I hope you still get to enjoy your flakes with the Frosties on.
Yes, I need some frosted flakes. It's my favorite. Got to have it. All right. Thank you, Giles. All right, let's go ahead. Let's keep going here, guys. That's what it's all about, is getting to the expert opinions on out there to keep you guys in the informational advantage, the edge. Right? We all want an edge, right? And one of the best ways we can get an edge is by listening to experts like Giles and, of course, getting to more experts. So one of the things that I wanted to do today, and we normally do a back testing show on Wednesdays at 4 p.m. Eastern. And we do that with a trader that I truly love just because I love the way that, you know, when you find disciplined traders and they have a process, they can just continue through their process and teaching by process. So I wanted to bring on a trader to kind of talk about what he sees on the market. Before we get to Michael Wang, veteran fund manager, CEO at Prometheus, that's going to be at 1:45. I wanted to bring on Christopher Udall from 10 Minute Stock Traders. What's going on, my friend?
What is up, Mitch? Dude, it has been A, far too long, and B, I appreciate you labeling me into that expert camp there. I don't claim to be an expert. I'm just a dude, just like you. But man, I appreciate having me on. It's been too long.
Definitely. I'm excited to talk to you. I wanted to ask, like, what are you seeing right now that's catching your attention? What is it that's going on out there that maybe you can see some opportunities, or maybe something that you're seeing strength and weakness?
You know, the best trade that I've been trading the last few weeks is short S&P, which has been working really well, cash, and that's about it. But now, if we're looking to buy a couple of stocks out here, I heard this incredible company. They're groundbreaking. I mean, maybe you've heard of them before. Revlon, right? It's up 8% today. This must be like the buy of the century, right? I mean, they're clearly a stock like this has no chance when it's up 80% in a day to be going into bankruptcy or having any sort of financial issues whatsoever. Pick of the day right here.
Well, at least while we're on it, I'll cover the news. I was going to cover it a little bit earlier, a little bit after, but Revlon shares were actually trading up higher. based on a rumor here, suggesting that Reliance Industries is considering a buying out of the company. Of course, Revlon earlier this week, Chapter 11, looking at they're trying to re-strategize here. But man, what a run there in Revlon. I mean, I was watching it too. I don't know if you were watching it earlier in the week. I started seeing these kind of price actions. And I was like, I stay away from bankruptcy. But it's up to you guys.
I had somebody ask me this morning, they're like, how are you trading Revlon? And I was like, I'm not. Why?
I can show you the chart all you guys want, but not my kind of tea.
Mitch, the whole market's just so sick, dude. I mean, we had that base that the S&P was going through, and I was saying for a while, I was like, watch this base. If I had to guess where it's going to go out of the space, I was saying down because the market breadth, it just wasn't there, right? We had a little bit of a market breadth thrust, and if you guys want to look this up, you can look up MMFI. That's the market breadth indicator I use.
Yes.
And it improved, but it was still like 40%. So 40% of the S&P 500 was still below their own 50-day moving averages. And that's a really easy line in the sand to say if it's bullish or bearish. And really, that's where my head was at. We didn't have enough breadth to come through that base that was being built and watch it go back to the moon like everybody's hoping it would do. Nah, that it got monkey hammered. That's the official scientific term. And this market is not one to be trading long whatsoever. Now, of course, one day it's going to bottom, but that doesn't mean you have to be buying it on the way down. You can wait till it bottoms first and then starts coming back up. That's the way I would be trading it right now if I were you.
Definitely. I've been talking about that also. One of the things is when we try to play the hero and call the bottom, how much really are we going to miss out on that bottom, right? I mean, maybe we miss out, 5-10%, but it shouldn't be the point where you miss out on all the gains if there is actually a bottom in a new bull market. So in my eyes, I think we just wait till we actually see signs of change, then we react versus trying to act and then see the signs of change. It's just not the way it works, at least with the market, especially in this environment. If you were going to say, we were in that crazy time, 2020, when we were getting every pullback, and it seemed like it doesn't matter if companies were coming out with negative catalysts, it was all about growth. But in this case, we're hitting valuations, right? At the end of the day. And I know that you probably have seen them. They've just been getting clocked and clocked and clocked and clocked and clocked. And it almost doesn't matter what stock. Even if you are kind of creating cash, I've seen great earning reports come out and the stock's still getting killed.
Yeah, and that's a sign of a bear market. Good news that gets poor price reactions, that's mega bearish. Whereas the other is true, right? In a bull market, any news that comes out is going to make the stock go up. And that's not what we're seeing right now. And anybody who's trying to aggressively call the bottom, we don't know where that's at. And there's no reason to put your hard-earned money that you literally, you worked your job for, you gave hours of your life for, at risk in this kind of environment. Minervini, he has a quote. He's one of the people that I learned to trade from. He says, let the less skilled amateur investors build the bases.
Yeah.
And then buy the breakouts when they happen. There's no reason to put your capital at risk.
Yeah, and sometimes it's as easy as, the old acronym KISS, right? Keep it simple, stupid. Don't go crazy. You guys don't have to wait. What is one way that we can wait to see kind of the trend change? What is maybe it's a moving average that maybe we should kind of keep on watch? What would you recommend, Chris, to at least start seeing that change coming into the market?
I like to see 3 moving averages all in confluence. First, you want to see the 10-day exponential being above the 20-day exponential. That means the price over the last 2 weeks is higher than the price over the last 4 weeks, basically. So when price is moving up, moving averages go up. And then once those cross, price by itself being above the 50-day. So when you have the 10 over the 20, price over the 50, that's a bull market right there. That's what you want to see. And listen, there's going to be a gap between where the bottom hits and where the trend comes back up. But that's okay. It's okay to wait and certainly not put your hard-earned cash at risk when you could be taking a break right now, man. It's the summer. Go take a break. I'm about to go take a week off, not do anything, and I have no regrets because there's just no opportunities right now.
So, one question I did get in the chat, the option alchemist asking about what was the breadth indicator that you mentioned? That's the MFI, guys.
MMFI.
Oh, MMFI.
Yeah.
All right. So it comes from the MFI, right? Could I rewrite that?
No. MMFI and so the money flow index and MMFI, two totally different things.
Okay.
So yeah, MMFI is the percent of stocks above their own 50-day moving average.
Okay.
And it's funny if
50-day.
If you Google MMFI, it's actually going to say, "Did you mean this other thing?"
Did you mean MFI?
Yeah, it's totally obscure. You're gonna have to dig for it. But I use barchart.com to get it. So if you go to barchart.com, type in MMFI, then you'll have it right there.
Well, one thing that I'm keeping on watch is that the market breadth of SMA 50 and also SMA 200. Right now, I'm seeing it at 12.3% of stocks that are above the SMA 200, 87.7% of stocks below that. What is kind of that number that you would probably see for complete destruction here? Is there any percentage that you're kind of looking out for where you'd feel, okay, now we're definitely at the point this is bottoming action?
My level is 50%. I'm looking to go long when I see 50% being bullish, and I'm looking to go short when 50% are bearish. Now, of course, I'm throwing in moving averages and things like that. But if you think of it this way, right, the moving averages on everything are just tanking, which is going to make the hurdle to jump a lot easier when it does start to go back up. Like we talked about Revlon, right? Revlon a couple months ago, the moving average, the 50 was at 10. Now the 50 is at 4. So that hurdle gets a lot easier as time goes by. So when things reverse, it doesn't have to go up as high to find that new bull stage there. And the biggest, best stocks that you're going to make the most from, they're going to come once that hurdle gets jumped, right? The best stocks you're ever going to have are going to be once the bottom is in and the bull market starts again. Those are going to be the ones where you're bragging and saying, hey, remember when Microsoft was at, I don't know, let's call it 100? Remember when Microsoft was at 100? And now it's at 1,000. Those are the Amazon stories. Those are the Apple stories that people talk about. So yeah, it's going to happen. We just can't put our own time frame on it. We need to let the market tell us.
Definitely. The last thing I'd leave off with is Chris. So not of course bottoming action that we're waiting for, but is there any area that you could see continuing getting weak? Is there an area where you're just like, yeah, I just stay away from that sector right now? Because
here's my thoughts. I think oil, which has been the darling over the last month or so, which I know it kind of relates to your last guest. Mm-hmm. I think oil might be, if you're willing to get in front of a train, I think that may be the spot to look at for going down. I think that's going to be the next weakest sector, mainly because we have so much negative news, negative everything, pushing it down. Now we've got inflation. We've got people driving less now because gas is $5 a gallon. You know what I mean? At some point, that straw is going to break, right, and start coming back down. So I think if there was a spot for weakness, I think it would be there. But keep in mind, it's a real strong trend, so it might just run you over if you get in the way.
Yeah, just to kind of give us some perspective there, 1 year relative performance on energy is up 25.92% compared to, let's say, consumer cyclical that's down 31.1%. And right behind that, communication services 28 and real estate 28. Technology not too far behind at a negative 20.8% there.
Hey, I know when all that long ago, I said Facebook may never get to 380 again. I remember calling that on the Benzinga show that we have, and people were like, "Oh, you're crazy, Chris. Nah, Facebook's one of those stocks, Meta. It's always going to go back up."
I was going to mess with
guarantee
you.
Of that.
I was going to mess with you there. I was going to say Facebook might not, but Meta might.
Yeah, Facebook's toast.
All right, Chris, definitely. Where could our audience find you to learn a little bit more about 10-Minute Stock Trader?
10minutestocktrader.com. Tons of free resources there. Get you all set up, get you up and running. Mitch, thanks for letting me hang with you, man. It's been far too long. I want to do this again.
Definitely, Christopher. I'll have you back on. Appreciate you coming on, man.
See ya.
All right, we're going to continue going right here on Stock Market Movers. In just about 2 or 3 minutes, we'll get into our next interview. Before we do that, I want to go ahead and touch up on some news out here. So the next stock that I want to talk about, let's go into Moderna here, as Moderna has some news here. Shares of the pharmaceuticals company did jump here. So let's go ahead. Let's take a look at Moderna and mRNA. Let's take a look. Let's put it up on the chart here. You guys can see we're getting a little bit of a bounce here around the 122 area. And what was the news today was that the shares of the pharmaceutical companies are moving after the FDA authorized Moderna's and Pfizer's COVID-19 shots for children as young as 6 months old. This is definitely some development. The move makes nearly every person in the U.S. eligible for vaccination. So we're going to continue watch to see if this can bring some of the healthcare stocks back. Let's take a look also at, of course, Pfizer PFE to see how that's doing. That's actually coming down right now. Kind of interesting. We'll see if this can kind of end into the green, but definitely major news coming out of Moderna there. With children as young as 6 months old being able to now have the authorization from the FDA to get the Moderna and Pfizer COVID-19 shots. We'll see how the reaction is from investors from this. We talked about the Revlon already. We've gotten into U.S. Steel. We've talked about the overall market. We also talked about, of course, what was going on in the options market this morning. We'll definitely be paying attention to it later. I will let you guys know we'll be having a live trading stream during 3 to 4 during the quad witching hour, which is definitely going to have some fireworks. We've already seen some fireworks early today with traders being kind of restricted for a little while there. They weren't able to process many trades with the bid price above the asking price. A lot of traders struggling this morning, and the CBOE now telling us that the issue was solved and everything should be working. Well, like always, guys, keep that on your radar and always make your own investment decisions. All right, coming up next, we're going to get into it here with Michael Wang. Michael Wang is a former veteran, former fund manager, and now he's CEO of Prometheus. We'll talk a little bit about that coming on next. First thing I want you guys to do is smash the like and check out, of course, Benzinga Pro. We'll play a quick trailer and then bring Michael on.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead. Let's dive on in. Let's bring on Michael Wang here, veteran fund manager and CEO of Prometheus. Welcome to the show, Michael Wang.
Thanks for having me, Mitch. What's going on?
Hey, super excited to go ahead and dive on into the market. But one of the things is we go to experts here because really, I can give plenty of opinions, but one of the things that we want is to get to the informational edge and to the people with experience. So we wanted to bring you on here, Michael. First, tell us a little bit about your background and your experience as a fund manager.
Sure. I started off as an investment banker doing M&A at Citigroup. After that, I joined a large hedge fund called SAC Capital. If you guys have watched the Showtime show called Billions, it's based on where I used to work and who I used to work for. So I worked for Stevie Cohen for about 5 years and helped grow one of the larger portfolios there. And then in 2012, I left to launch a hedge fund called Tourbillon Capital with a guy named Jason Karp. And that was a long short equity fund. Grew that to about a couple $2 billion. Before I left New York, this was all New York, in 2015, moved to LA where I currently am to take over the oldest hedge fund still in existence called Cypress. And Cypress, another long short equity fund that was started in 1969 by my partner, Robert Day, and ran that for about 5 years before leaving the fund management industry to start my fintech platform called Prometheus, which aims to democratize access to hedge funds, venture funds, crypto funds, real estate funds, private equity, etc. And at the same point in time, allowing users to actually engage with and learn from the pros behind these funds. So
that's really what it's all about, right? Learning from experience and then getting to kind of like you mentioned, your great mentors. We would all love access to opportunities like that. So I appreciate you bringing some tools for the retail traders on out there. Let's get into kind of a tip. And I think that you're great to get this is what would you give new investors that are just starting off in their investing?
Be careful with leverage, number one. Number two is only invest money that you can expect to take potentially significant losses on. And this goes with that leverage really issue, right? Is investing is a full-time job. It's not really a part-time job. And even me running a fintech company now, a lot of my money I place with other managers, despite the fact that I've been an investor my entire life. It's because I have a day job now running a fintech company. So I don't have the time to manage my portfolio as much. And so it's really important to be thoughtful on the type of risks that you're taking, and to also do your own diligence as well. Don't just buy something based on an emoji of a rocket ship or moon. And be careful for taking other people's advice. I would highly, highly recommend to do your own work.
Oh man, Michael, I was going all in on the Doge, but that's just how
that
it
may
goes.
work out for you. Elon Musk loves it. I'm sure he's gonna pump that again. So
Yeah, I need him to go on Saturday Night Live again. That's probably the only way that's going to work out. But
yeah. But you remember, buy the rumor, sell the news. So if you
yeah,
remember
you
what
might
happened,
want to
right?
sell.
It was bid up into the event, and it obviously sold off after the event.
Too bad the markets aren't open on Saturday, right?
That's right. Yeah. Well, actually, Dogecoin is.
Dogecoin is. That's exactly true.
Crypto's open 24/7.
Definitely can't hide out in the crypto game. Let's
right.
talk about how you're seeing the market sentiment right now. There's a lot going on, but how do you see it right now, Michael?
Oh, market sentiment's in the dumpster. And you could view that with so many different indicators, even something as the CNN Fear and Greed Index. It's at extreme fear right now. I get a lot of reports from Goldman Sachs, Morgan Stanley, et cetera, prime brokerage reports. So I could see on a weekly basis what hedge fund exposures are to the market. And I could tell you, for instance, that hedge funds net exposures are the lowest they've been since April of 2009. So literally from the crisis. So hedge funds are running the lowest amount of exposures they've had in the last 13 years, essentially. On top of that, Bank of America had a research survey across a bunch of institutional managers, not just hedge funds, but also long onlys, and highest cash levels since 9/11. And I don't mean September of 2011. I mean 9/11, 2001. So people are extraordinarily fearful. And I think in the last 7 trading days, 90% of the S&P 500 were down 5 of those 7 trading days. And the last time something like this has occurred, or every time this has occurred, you've actually started to see, a few weeks of positive performance, i.e. people are all in one side of the boat right now, i.e. very, very negative. And it doesn't take much for the market to move up. To be clear, we're in a bear market, but even in a bear market, you could see some vicious rallies. So in the 01.com bust, where the NASDAQ went down 80%, there were multiple instances in which the market went up 20, 30, plus percent. And so if you're short, just be cognizant that these bear market rallies could be vicious. But yeah, just be careful out there. Market sentiment in the dumpster. So it is what it is, but I get it.
You just told us, Michael, how much of the money is really on the sidelines right now. And one of the things that I think that investors are asking, and I would say it to you, where can investors hide right now?
It's very difficult with traditional assets unless you want to run a neutral portfolio. So what that means is that, for instance, Tourbillon Capital, the fund that I helped launch back in 2012, that was a low net fund, which means that for every $100 that we bought in stocks, we also shorted $100 in stocks. So we had really no exposure to the market. It was a pure alpha fund, and it was uncorrelated. So there would be instances when the markets were down and we were up, and then vice versa as well. That requires a lot of training. It requires a lot of experience to run a portfolio like that. And in general, it requires a lot of experience just to be short, because shorting is actually not the opposite of being long something. And the biggest part about short selling is the psychological impacts, because when you short something, you theoretically have unlimited amount of risk. Whereas when you buy a stock, I say only, but you only have 100% downside, right?
Yeah.
But if you were short GameStop back in, Jan, Feb of, last year, you would have lost a lot of money, like 1,000% or whatever it went up. So just be careful. I would say the place to hide is you could be in cash. But listen, inflation's really high. You're in cash, you're losing, 8%, purchase power. That's not great. And then the other place is, listen, here's one thing to keep in mind. Everything sounds very negative right now. All the data that you see, the entire media, it's all negative news. Everything from housing to crypto to tech stocks, to the economy to layoffs. But fortunes aren't made in a bull market. They're actually made in a bear market. They're made when things get trashed. You want to be a liquidity provider, i.e. you want to buy when others are selling. That's easier said than done. At the same point in time, just know that you'll never be able to call the bottom. Never. So what I recommend people to do, quite frankly, is there are some stocks out there that aren't going to go bankrupt, but they're down 70, 80%, and I'm just going to throw one out. I don't follow this that much, but I was looking at today. Farfetch, it's basically an online retailer for high-end goods. The stock's down 90% from its highs. It's got net cash on the balance sheet, and they're not burning a lot of cash, at least now. The litmus test for something like this is probably, is it going to go bankrupt? Well, they actually have net cash. Again, they have more cash than they have debt, unlikely. In which case, if you have a long enough time horizon, this may be something interesting. And so that's what I would go searching out for is companies that are good quality companies that you may have followed in the past. Maybe they're too expensive, 3, 6, 9 months ago. But my guess is they're probably down at least 50 to 60% already right now. And do that analysis, look at their balance sheet, look at their cash burn. If they're not going bankrupt, and most importantly, if your time horizon is long enough and you could withstand short-term volatility, it may be a good time to buy. But it all depends on your time horizon. If you are looking to buy something and sell it, a week later, don't even bother playing in this market, because you'll have no idea. I have no idea. Quite frankly, nobody has any idea. Very, very difficult to do. But if your time horizon is long enough, i.e. a year plus, there's probably a lot of stuff that you can probably make a decent, quite a bit of return from, by picking things up around here.
Definitely. I like how you made it. At the end of the day, in the bear market, that's where we probably get the biggest opportunities, right? And one of the things that I think you're kind of really leading into, and it goes into my next question here, is there any themes that you like in the long run? Of course, we're talking probably more than a year out from here. Is there any themes that you're kind of interested in to seeing how it develops in the innovation?
Well, listen, I'm always a big fan of technology. I have some crypto. I'm not a crypto expert whatsoever. But for whatever reason, I've been being interviewed a lot about crypto, despite the fact that I'm not a crypto expert, and I end up just talking about the tech stocks. But what I do see in the crypto market really does parallel what happened in the 2001 crisis. So people ask me, is the tech environment now like the tech environment in the .com bust? No, actually, not at all. The tech companies today generate a lot of free cash flow. These software companies have high visibility into their revenue stream, because they're on subscription models and they're solid companies. Okay, they may have been overvalued and they're readjusting the valuations now, but they're solid companies. No resemblance to some of these .com companies 20 years ago. However, the stuff that we're seeing in the crypto sphere does resemble what happened in the .com bust, which is that I would venture a guess 95% plus of these cryptos are worth zero. I mean, you can't expect to just me and you can create a crypto coin right now and just sell it out there. And if it's worth $1 billion, I mean, it's just not. It's probably not worth much, right? But that being said, that doesn't mean that blockchain and crypto itself isn't the technology of the future. It's just the same thing as saying in the .com bust, despite the fact that 90% of .com companies actually went bankrupt, doesn't mean that e-commerce wasn't going to happen. Doesn't mean that the internet wasn't going to happen, right? Same thing here, So there are going to be things that are interesting coming out of that sort of crypto and blockchain sphere. And this is, mostly in the private markets, but obviously you could buy things like, I'm sure Bitcoin's going to stick around, things like Ethereum, the quality ones. Yeah. I'm not so sure about your Dogecoin,
I don't know about it. I don't know about it.
But the quality ones, but then also technology, it's very hard to bet against technology in the long run. Very understandable why technology is correcting, because number one, it's been overowned for a decade. Number two, valuations got way, way too high. But that being said, if you believe in the future, which I hope most of us do, by definition, you sort of have to have technology in your portfolio, Yeah. And now listen, if interest rates go up to 15%, like all bets are off. Obviously, we got bigger problems, and tech stocks will be going down in that environment. But that being said, your good quality tech companies, they're gonna survive, and I believe in the future. And the other thing to keep in mind is like, and I've been through so many damn cycles, is this too shall pass. We will get through this. There's one chart, and you can even Google this chart. It's like the Dow Jones in the last 100 years, and it's an annotation of the Dow from the last 100 years. The Dow is like this, straight up and to the right. And then what the chart annotates is every single negative event that's occurred in the last 100 years: wars, famines, inflation, blah blah blah. And guess where the Dow was? Towards its highs, right? And what does that tell you? It tells you that if you have a long enough time horizon, America figures it out, and I do believe in America. I'm not trying to steal this from Warren Buffett. It's just the truth. It's factual that we'll get through this, right? Things to watch out for a quote unquote bottom, very hard to tell, but things that I like to look at is this. What will get me more bullish? One is when companies miss or pre-announce negatively, which we're going to see a lot of them, by the way, in a couple of weeks, is pre-announce season in the first couple of weeks of June, and the stocks open down, but then close up. That's a good tell that the market has already priced in the negativity in these stocks, right? Just like how we were seeing in the last earnings cycle, companies would beat, stocks go down, open up and down, and that's because the market was pricing in, hey, doesn't matter what your earnings were in Q1 of this year, because your earnings in Q2, Q3, Q4 are going to be declining, right?
Exactly.
So that's one thing. And then two is from an inflationary standpoint, the problem with this environment to keep in mind is it is not a bottoms-up environment. It is, in fact, a tops-down environment. And what I mean by that is macro is controlling everything. So like I said, even if you were beating earnings this past few weeks, your stocks would go down, and it's because the macro and the inflation and interest rates have been going up. The moment that inflation starts to miss, and it will, that's when you want to go really bullish. Remember, the market is a forward mechanism. So we could be in a recession, but the markets could be working upwards, even in a recession, because the market will start pricing in a recovery once they start to see that we're past the worst of inflation. So a couple of things to keep in mind.
Definitely something to keep in mind. We'll keep on watch. One of the things that we're looking at is, can we really start seeing that bottoming, the earnings start changing? I do agree with you. Definitely. We don't want to see revisions to the downside and continuing to come on into the market. So something that we'll watch.
Actually, you do, and I tell you why. The market, this is a type of market where, in my view, it's bad news is good news.
So you want some
The
extreme.
reason why is this is the number one concern that the market has is inflation, right? And because that's the number one concern that the Fed has. They would rather us go into recession than inflation continue to go up, which means that what happens when companies reduce earnings is because there's demand destruction, really. And so as there's demand destruction, you're starting to see it now, whether, airline prices starting to come down, housing is tanking. That's all deflationary eventually, and so you'll want to see these earnings get reset. And what you want to see to get more bullish is earnings reset, but the stocks actually start going up on those earnings resets. So
thank you, Michael, for joining us today, guys. Definitely veteran fund manager and CEO of Prometheus. Where could they go ahead and find you, Michael, if they want to learn more about Prometheus and, of course, about yourself?
Yeah, go to our website, www.prometheus.com. And, we are still in beta right now, but you can sign up for our wait list and we'll get you on as soon as we can.
Boom. There you guys have it. Thank you for coming on, Michael. We'll have you on again.
All right. Thanks, Mitch.
All right, guys, that's going to do it for us, guys. We got a little bit of overtime action there. We went a little bit over, not a problem at all. But one of the things that I will say is that's what it's all about, getting towards the expert opinions. That's what I did this show for. At the end of the day, I want to make sure that you guys will hear some opinions from me, and you guys will hear what I look at, if I wave a red flag or not. But of course, what I want to do is get you guys the informational edge that you guys need from the experts on out there. So do me the favor, hit the thumbs on up and hit the comments after the show. Let me know what you want to see more or less of right here on Stock Market Movers. We're going to continue bringing on other hedge fund managers. We're going to look for chief investment officers. We're going to look for it all out there. So if you guys have someone that you guys want to see on the show, also hit up the comments. Let me know. I'll go ahead and reach out and make sure that they come on right here on Benzinga. I'm going to go ahead and wrap on up. Up next, it looks like we should have some Moon or Bust content, but it looks like for some reason I think the Moon or Bust guys are out right now. So what we're going to do is stay tuned. At 3 p.m., we're going to go ahead and do some quad witching live trading. So I'll be there. I'm going to take a short break, but I'll see you guys there at 3 p.m. Eastern so that we can take a look at the quad witch. What are we going to get out there? Hit the thumbs on up if you guys enjoyed today's show. And like always, we'll keep going here on Benzinga. Smash it up, guys. Let's keep going.